Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement here on the Max Out Savings Show. Our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. And that's the key to building up wealth over the long term. If you just put away your money in your 401k plan, your different type of plans, you start out that way, the numbers are actually about, they're about 10% plus the company match, of about 3% in average. The actual number is 13%. If you put away that much money total in your plan, that will generally get you where you need to be for retirement. And so then after that, you can spend as much money as you want. As we've talked about on this show, endlessly, really, the value of the 401k plan. You get tax free. Let's run through the numbers. Let's say you put away $10,000 in your 401k, just to ease the math. So you put away $10,000. If your tax rate is 25% of the top margin, you get back $2,500 at tax time, or you get back $2,000 if it's at 20%. So you're getting back $20,000 or $2,000. You're getting back your top marginal tax rate right off the top. Then you're going to get growth, tax-free growth for 30 years, actually more than that, because at retirement you could be looking at 50 years of tax-free growth, which is just incredible. I mean, as we talked about on the show, Warren Buffett, when he started his Berkshire Hathaway, he bought an insurance company because he realized he could grow the money tax-free in there using the insurance things to do it, because and oftentimes he'll structure takeovers so he gets stock because he never wants to pay taxes, and the government gives you tax-free growth. And then so when you finally take it out, then you're taxed. And so it's an incredibly good deal on top of it. But the number one reason you do it isn't even that. It's that it's the income-based savings program that goes away each paycheck. Most people, if they try to put away money in a savings account at the bank for retirement, they'll do it each paycheck, and then something comes up, they have to buy a car or a new house or something. If a crisis comes up, they quit saving, and then they're going to do it just for the next 3 months, and then a year or two later they still aren't saving money. It's very, very hard for most people to put away savings for retirement in anything but these type of automatic plans. That's why they're so valuable to do that. And that's why we talk about this at the beginning of the show. Really, our show isn't about 401k plans. It's about saving money. It's about building up wealth in the world today. But these programs are so valuable and so important to your building up wealth that we talk about them. As we said, save aggressively, invest conservatively. By the way, one of the reasons, how did we come up with the Max Out Savings Show? The show started in 2006. We'll be coming up on 20 years here. Just incredible. At the time, when we started the show, the savings rate was about 2%. It actually, in 2005, when we're thinking, it was around 2% at the beginning, late in the year. This was like a savings crisis, and it really averaged in the 60s and 70s, almost in the 80s, anywhere between 10-11% down to maybe 7-8%, but then it plunged down, and we realized that there was going to be a crisis, and we started talking about savings. That's how we got the whole name. That's how the whole show started. Is we really wanted to talk about the importance of saving money and building up wealth. So here we are today. You're investing in the markets, and it's been kind of a wild ride this week overall. With the markets, but we're going to cover a lot of stuff that's happening. Again, when we started the show, things kind of moved pretty slowly, but it seems like lately it's just the velocity of news and the velocity of change has really picked up. And this week we had a big a substantial correction in the market, particularly in the Nasdaq. It rallied at the end of the week up, but the Nasdaq was still down 3%. If it hadn't rallied, it'd been down 4% in the Nasdaq, and the S&P would have been down 2.6%. But they had a rally. Word leaked out that there was about to be some type of announcement for the government shutdown, the longest in history, and so the market popped back up. But what happened? What happened this week? Why did some stocks plunge quite a bit? You had companies like NVIDIA, for instance. I think I've talked about this on the show. I don't know if I mentioned on the show, but I think I maybe did. But I think NVIDIA has really kind of reached a top in many ways. But it which they make the AI chips, and we've had an AI boom, and it was about $210 earlier in the week. It ended up, it went as low as $180. So that's a substantial drop in a week, and then it rallied back up to looks like 180, something like that, 190, somewhere in there. But the issue, a couple things, NVIDIA in particular, the issue you have to deal with is NVIDIA has made these high-power AI chips, which is going to power the world, and is the biggest, possibly, according to some people, the biggest game changer in humanity in history. Although I'm kind of like, well, what about electricity? But or what about the gas or the gasoline engine? Those type of things. But people are just convinced because you didn't have electricity. I mean, AI kind of helps supplement the mind and can quote think. You can't really think, but people think it can think, but people think pretty well right now. And so we have this huge. So they're making the chips. They're going to do this, and this is wonderful. They're making a fortune. The market cap of this company is hit $5 trillion. I think earlier this week, $5 trillion. But I'm looking at this and I'm going, wait a minute. You said AMD has announced they're going to have a chip. They're making their own chips. XI and Tesla are making their own AI chips. Google's announcing they're making their own AI chips, and others as well. And I'm like, wait a minute. It seems to me margins go down when other new producers come onto the market. And I don't think people are anticipating. And a $5 trillion market capitalization is just enormous. But what triggered this huge drop in the stocks this week? And I don't think it's over yet. And I want to kind of cover that. This whole thing started with AI. It's like, oh, this is so exciting. AI is things. And I got to tell you, I use Grok. It works super well. Sometimes it'll even talk to me. And I'll start asking it questions about a stock, and it'll sound like a friend of mine or something that's a portfolio manager starts talking trash to me and stuff, and I'm like, wow, this is. But these things they work pretty well, although they're often wrong, and I have to correct it. I'm like, well, Grok, I don't think that's correct. Could you check it in? Oh, yes, you're right. I'm like, okay. But what we're looking at is this thing started out with NVIDIA making the chips. And then Google and different people, OpenAI, X, all the Tesla, they're all start building data farms out there. There's a $50 billion data farm being built up in Abilene. $50 billion, not $500 million. It's 50 billion. It's either 50 or 5. It's just some ridiculous. It's $50 billion. The number is so huge. At the time, I was shocked on it, and the numbers keep getting bigger. And so what the whole story with AI was, well, look, we've got these big tech companies that can fund this. They have pristine balance sheets. Candidly, they have so much money. All they're doing is buying back stock all day long, pushing the market higher. Apple, NVIDIA, Google, Meta, Microsoft. Tesla really doesn't buy much stock. The other ones are big stock buyback. They're all spending huge amounts of money. And so, and to give you some examples, Apple has a $4 trillion market cap, and NVIDIA has $4.6 trillion. It dropped some. Google 3.3, 3.4 trillion, Meta 1.6 trillion, Microsoft 1.7 trillion. It works up in Tesla's about 1.4 trillion. So they got $18 trillion in market cap. Most of them have very little debt, although Apple and some of them really been taking on debt just because they have these huge stock buyback programs to push the prices of their stocks up. And so they should be able to. This market cap of $18.7 trillion. So in theory, these people should be able to realize to build out, to spend $1 trillion easily to buy back. To build out the AI data centers, to purchase all the chips from NVIDIA and everyone else. And how it kind of works is NVIDIA sells the chips, and so OpenAI buys the chips, and then Microsoft or Oracle or whoever gives OpenAI an order that they'll take X billions of dollars worth of computing capacity, and they take that to NVIDIA and buys the chips. And so it's kind of a circular thing. And actually, I take that back. How it works is Oracle decides to build a data center, so they order the chips from NVIDIA. Okay, then NVIDIA makes an investment in OpenAI of $100 billion or $500 million or whatever it is, billion. It's I think $100 billion or something. Then OpenAI comes back and says, we'll spend $300 billion with Oracle. So it's kind of a circular thing. Well, it's all going well. But then all of a sudden, we need more and more. There's 240 data centers going up with millions of AI chips. Well, they don't have enough money for all this stuff. Now, we just said they had $18 trillion in market cap, so they got massive buying power, right? But then, so they go, we're going to go to private equity. In private equity, in private debt, private credit is going to lend us the money. They're going to build out these things, and the private equity can go buy. They can go buy a data center, and we'll give them a contract order to purchase the power, and then the private equity people can build the data center, buy the chips from NVIDIA, and it all goes great. So everything is going great. Well, then they want to build more and more plants. They need electric power. They're starting nuclear power plants. They're building natural gas plants. And they're all blowing and going. Things are doing great. Well, they start running out of borrowing capacity. Keep in mind, the private credit people, they only have about $400 billion, and that's all being spent up. So what happened this week? Well, the CFO at OpenAI comes out and says, well, we might need possibly, if the government would guarantee our debt of trillions, maybe $500 billion or $1 trillion worth of debt, then we could keep spending the money and it would lower our cost basis. So we went from, hey, we're going to be the biggest capital expenditure operation in history to build out AI, but it's all funded by the tech companies, to we're bringing in private equity, to now we need government help. And all of a sudden people are going, whoa. And plus, we're not going to have enough energy. We can't even build enough energy to do this, and everyone's energy costs are going to skyrocket now. And all of a sudden people are going, whoa, what's going on here? Wait, why do you need how many trillions of dollars? You want the government to back it up. And all of a sudden people are going, this thing is eating the entire economy. I think the guy at Morgan Stanley or JP, one of them said, AI was becoming the blob that was eating the entire economy. And that's what happened this week. And so there's been some pushback like, no, hey, we're not putting the U.S. government's balance sheet to sit there and build, to backstop AI. It's one thing to put $20 million into a critical minerals, a rare earth mine. It's another thing to sit there and put hundreds of billions of dollars worth of credit stops on tech companies, on top of a $38 trillion worth of debt we already have, that people are nervous as can be about that. And people start going, well, what are you doing there? Why aren't you helping people over here? Why aren't you building out a rail system in the United States? Why aren't you building out the road system? Why aren't we improving people's quality of life in this country? And so that's what happened. And so it triggered a fundamental shift where people are starting to push back on AI and like, what's going on and what is the guarantee? I think one of the comments from one of the shareholders of OpenAI had audacity to ask the head of Sam Altman at OpenAI. He goes, look, you guys have $13 billion worth of revenue. How do you plan to handle the $1.4 trillion worth of commitments you've made? And this is $1 trillion. As we talk about endlessly on the show, nobody even knows what $1 trillion is. It takes like 25 or 30,000 years to count to $1 trillion if you go 1, 2, 3. And yet Sam Altman, who basically stabbed Elon Musk in the back because that was going to be OpenAI for humanity. It was going to be a nonprofit, and then he changed it to a profit-making organization. And so he's the type of guy that really can't be trusted, and yet somehow he's made $1.4 trillion worth of commitments into the future. And people are starting to question the whole thing. Now, a couple thoughts on that. Is AI for real? Yes. But the question is, where do we build it and at what point? And we're going to talk about this after this quick break right here on the Max Out Savings Show. Is where do we go from here?
Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
In the 1970s, the big song was the Bee Gees' Stayed Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're really talking about this week why was there the big sell-off in the AI sector. And I mean, again, I don't think it's over yet either, by the way. But and one of the other things that happened is Jensen Huang and NVIDIA said that the Chinese were basically right behind us on AI. They were like, microseconds, I forgot the exact, something like just right behind us in catching up. So we have to, and then shortly after that, that's when they floated the loan guarantees. And a couple thoughts there. Look, the Chinese, they don't have trillions and trillions and trillions of dollars to throw at this. They have a lot more engineers than we do, but we're the most innovative people on the planet. Now, the Chinese, since they don't have infinite amounts of money and couldn't get all the AI chips, have gotten much more efficient with their big data models and their big AI big data models and stuff. So they're much more efficient. Well, that means they're going to be more efficient. That means they're going to use less power and need less powerful chips, which is actually the better way to go over time. And we don't need the biggest AI. The only thing we need the biggest AI for is a few very fine cutting edge areas in really medical and really defense. That's where we need to have the best, most cutting edge AI. The rest of it, whether Ted or you, checking on what time the Aggie game starts or whatever, or what are the odds or the different. We don't need the most powerful things out there, and so I think something that's fundamentally missing in this AI situation is this is a capitalist society, and we're able to do this by allocating money most efficiently based on how people do. And so rather than giving money like the Chinese do or the Russians and other socialist countries and just throwing money at the problem, we allocate to the most efficient users of capital. And I think we have to go back to that. I think it's ridiculous to extend loan guarantees on this AI. But that's what we're looking at here. And so this is something that we're going to have to watch closely. I don't think this correction is over. The valuations on these companies are gigantic. The good news is, look, there's a lot more people coming into the business. Elon Musk says on his Tesla cars he's going to have a new. I think he has an X5 chip, and he's come up with like the X15 or whatever chip, and it's like 10 times more powerful, and it's almost like an AI chip in itself, and it's going to be in the cars. That's what you want to see happening, and so the capitalist system is working, but it's going to be much more volatile. Is AI going to be a big winner? Absolutely. Are there going to be huge winners in AI long term? Yes. One of the problems we run into though is everybody going to a winner? Is this going to be like your 6-year-old's soccer team? Everybody gets a trophy. No, it's not. And some people are going to lose, and there's going to be huge losses as well as huge winners, and we're going to start seeing that. Again, we don't think this whole move is over yet. Now, the other big thing that happened this weekend, and again, the pace of change just amazes me, but is Magnani or whatever the hell his name is up in New York won the New York mayor's race. I mean, how that's possible, how a radical Muslim communist gets in New York, the financial capital of the world, probably the biggest concentration of Jewish people in the world is outside of Israel. It's just beyond me, but somehow it happened, and somehow the other side manages to run two candidates, which basically a sixth grader in math would tell you that's probably not going to work. But here we are. And looking at that, again, so where do we go from here? Again, a couple thoughts come in. Number one, every radical socialist in the country is now thinking of running for Congress or mayor or whatever. In places like Seattle, San Francisco, Magnani was a councilman. In New York, we already have socialists in these positions, and so you're going to now. Most of these guys are going to flame out, but there's some of them are going to get through the primaries, and some of them are going to get to Congress, and it's just going to ignite socialism in this country, and that's real hard. Young people, are easily influenced by this. We lost the greatest champion of capitalism and Christianity for young people we've seen in my lifetime, and you probably have to go back. I don't even know into maybe the 1950s, 30s, or 40s, or the 1920s to find anyone close. And Charlie Kirk, and we lost him. So we're at a disadvantage, and so this is going to move forward to some extent, and I think it's also it should be. I think it should ring some alarm bells in the White House. I mean, they didn't just win in New York; they won in a number of places. And a couple of thoughts: going overseas to the Middle East, dealing with the Ukraine, dealing with the Israeli Gaza situation, dealing with China. People they're interested in the United States. They're interested in their lives and the improvement of life in the United States. And I think the president has spent an enormous amount of time and actually done quite a good job and done some phenomenal things overseas. But he's going to have to turn his attention to the United States. And he needs to start fighting for the average person. He's going to have to get more populist, or the Republicans will lose. And helping out different industries, be it the tech industry, the drug industry, all these you have to start pushing back on some of these big companies. You have to make it look like you're fighting for working people. Let's be realistic. Margins on the S&P 500 are at record highs. So it's not like any of these companies pretty much get whatever they want. But the big companies are not creating jobs. We're seeing enormous numbers of job layoffs coming throughout many big companies in the country. They're blaming it on AI, but candidly, AI isn't even close to doing anything in most big companies. They're just using it as an excuse because these companies are under so much pressure to grow their earnings, 5 to 10%, well, actually 6 to 10% to 12% every year. And in a slowing economy to some extent, they've got to cut workers because they have to grow earnings even in recessions nowadays because of Wall Street. And when you have things like federal judges that getting Google dead to rights for antitrust issues, and then basically letting them off the hook and not even having to pay a fine or any, split the company up or anything, doesn't do anybody any good. And so I think Trump is going to be much more populist. I think they're clearly probably much more worried than they're letting on in the White House. Trump pivoted almost immediately, talking about cutting food prices, talking about weight loss drugs. And that's another thing. I mean, how are these weight loss drug companies? They want to be covered for everyone. Then they have the audacity to come out and charge $1,000 a month. I mean, the drug industry is the only industry on planet Earth that there's no economies of scale. So if they can sell the drug to one person, it's $1,000 a month. If they can get 20 million people on it, it's $1,000 a month. You're like, wait a minute. And Trump is finally pushing back. And this ridiculous idea that we need these high drug prices to fund drug research because we're the leader in the world, and then the drug companies moved all the factories overseas for tax things, shows you that they're not watching out for the American people or the United States of America. All they care about is their balance sheet. And so I think Trump is going to have to, across the board, get much, much tougher with these things. I mean, I think this win in New York with the socialists is deeply disturbing. And I think Trump has to really refocus. Now, the good thing, he is clearly refocusing very quickly, and they're pivoting. And I think going from here now, keep in mind, it's 1 year to the midterms, 12 months away. And so I think you're going to see a lot of things happening. I don't think it's in Trump's best interest for the market to go straight up, for the next 4 months and then fall apart right before, 4 or 5 months before the election. So I think if you want to get a correction, you want it kind of in here now, so you can get things going. The economy is clearly starting to slow down, and this goes back to one of the things we've been saying a bit. That, by the way, no one else has been saying this but us. Is that this economy is going to slow because of the program to remove the illegal aliens, which there's just too many illegal immigrants in the United States. The Biden administration let 5 or 6 million people flood in with zero vetting. We've got terrorists, we've got criminals, we've got rapists and murderers all over the country that have flooded in from their country because everybody wants them out of their country, and now we've got to clean it up. This is putting, but it's a great program, but the problem is illegal aliens. the immigrants, they're afraid to leave their home. I was listening to Bloomberg the other day, and actually the first people that commented on it was them. And one of the guys goes, I like to go fishing on weekends at the so-and-so Strait somewhere in New York. We go out there and I go fishing. Well, usually the place is full of people of typically migrants. They're picnicking and fishing, but the place is empty. And so they're not going to the park. They're not going to the restaurant. They're not going to the bar. They're not going to go buy a new car because what happens if they get picked up? They're not buying a house. So you're seeing
you have Charles on one.
Okay, so you're seeing the slowdown across the country in the economy, and that's what we're dealing with is a slower economy now. Let's take a quick call from Charles, and there's a positive come out of this as well. Morning, Charles.
Good morning, Ted. Listen, I just want to offer a brief comment before I ask my question, and that is, I know you were talking about the weight loss drugs and the prices and everything, but I think, I come from essentially, I'm just a person that I believe in free enterprise, and weight loss drugs are not an essential drug, truthfully speaking. There are other ways that you can lose weight, and the point being is that I'm in favor of let the markets decide. If these drug companies want to charge, $500,000 for their drug, we'll go right ahead. It doesn't mean that people are going to buy it. And the whole point with free enterprise and the markets is eventually they're going to have to lower their prices until finally they start to get some takers. And the point being is if this was something that was truly necessary, that may be a different issue. Let's say, for example, like diabetes or something, where if you don't get your insulin, you'll die. Something like that, I could see something like that being, obviously measured or controlled.
Yeah, but here's what's happening, Charles, is that the doctors are writing the Medicare is having to cover it. And for certain things, and a lot of the doctors are being pretty lenient on what the actual definition of say diabetes is and stuff.
Yeah, but last week Medicare was not covering it. It's only when the president came out and said Medicare would cover it. Now they're going to cover it at, I think it's $149 or $300, depending on what your coverage and what you are into, as far as whether you're on regular Medicare or what you have. But prior to this week, Medicare didn't cover any of this stuff. So the point is that in that light, these companies are free to charge what they want to charge. And I'm not going to sit there and tell them that they can't charge. It's no different than if GM comes out and says, I want to charge $150,000 for a Chevy pickup truck. Well, go buy a Ford, go buy something else. Eventually they'll get the idea that, hey, wait a minute, we need to go back and revisit the pricing. But that said, I wanted to get your take on this business with the tariffs and what your thoughts are with the Supreme Court, because on the one hand, I'm understanding that President Trump has some other tools in his toolbox, so to speak, in terms of tariffs, that if the Supreme Court rules against this tariff thing, that he can obviously still impose tariffs, but in certain other ways, so to speak. But in the event that the Supreme Court rules against it, do you think, number one, that this money that's been collected is going to have to be returned? Because I really don't think so. I think that they're going to have to, in my mind, they may put something in effect going forward, and they may let this slide. I think it would be a nightmare to have to go back and now undo all of this tariff stuff at this point in time. But I'd like to get your take on that. What do you think is going to happen with the market?
That's a really good question. Look, I think the Supreme Court's somewhat in a tough spot, but the problem is it is an emergency. This is a wartime situation. I'll give you an example. I'll talk about this at the next segment, but on the example part, but what I think that they're likely to do is, one thing they might be able to say is, okay, you can use tariffs for a wartime emergency type situation, but they can only last 6 months or a year. Then Congress has to approve it. So so it's a limited special situation, and that might be kind of, splitting the baby type of way to do things, where you I'm not sure that's quite the analogy, but so you split it, and you don't give the president concrete the ability to move tariffs, but he can in wartime or emergencies, and I think that would ideally be the thing, because the problem candidly isn't the tariffs. The problem is the money, as you point out, and we got to refund the money. And look, we have $2 trillion deficits. We're trying to get those down, and Trump has a 4-point plan to do it. But if that plan starts failing and people think this deficit is going to spiral out of control, it could cause a collapse of the dollar or a huge surge up in interest rates. And so it's a very difficult situation, and so the Supreme Court isn't, because the ramifications are not good if they don't do it. Are really we're going to have a real problem.
Right.
And so that would be my guess as to what happens. Either they say this is a wartime situation, which I believe it is, and they go ahead and say we can keep it, or they can possibly say, well, since it's wartime, but since you don't have specific thing, it has to be a certain time. It's not open-ended.
Real quick, Ted, I just want to get your take on inflation real quick. People are complaining that the prices haven't come down or whatever, but my thoughts on this, and I don't know your thoughts on it, but I think part of the reason for these prices staying where they are and being sticky is because, for example, the Federal Reserve can't do anything about insurance rates, whether it's automobiles, whether it's homeowners insurance. They can't control that. And the same thing holds true for state and local taxes. You look at the people up there that live on the eastern seaboard of New York or New Jersey, and they're complaining because of the high cost of food. But then look at the taxes and all that they're paying. And I think some of these things, I think, are impacting inflation because and the people are wanting to know, well, yes, President Trump is dropping the oil prices, but he's not doing anything about this other stuff, and really, I don't think he can control these other things.
Well, yeah, he can. That's at the state level. But one thing, and I think you're going to see him try to do some stuff with that, because they're very acutely aware of what happened and what they need to do. And one of the things you can do is you can declare an emergency summit, have all the governors come up to Washington to discuss the insurance issues, what the states are going to do to lower insurance. I mean, look, it's not that I don't want to beat up on these big companies, but what I don't want to do is I don't want us to sit there and go merry along, and all of a sudden we look up and in 4 years we've got socialists all over the place and we're in dire trouble. We're going to they have to make some big changes now, and it's coming. And I think that's a real wake up call in New York. But yeah, I mean, we're going way over on the break. Thanks for the call, Charles. We'll be right back. Max Out Savings Show.
Savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way
to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
I'm Ted Gioka, and I approve this message.
Inflation, instability in the market, bonds, precious metals, oil and gas, and lack of old-fashioned cash puts your retirement at risk. It takes a different type of portfolio to deal with these issues. And that's where Ted Gioka can come in, and he can help. Go to MaxOutSavings.com and schedule some time with Ted. That's MaxOutSavings.com. And listen to the Max Out Savings Show every Saturday at 10 a.m. on AM 1070 and FM 1033. The Answer.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome to the Max Out Savings Show. You can give us a call at 713-339-1070. Also, if you get a chance, go to our website, MaxOutSavings.com. Sign up for the free newsletter. It's the Max Out Savings Report. Goes out once a month, talking about all these big issues in the market. And there's a lot of changes coming up in the new year, tax-wise, IRA-wise, those type of things. We're going to be covering those in the future Max Out Savings Reports as well. We're just kind of talking about some of these big issues with the socialist mayor coming in New York. We're going to see some changes. Trump is already working to get drug prices down, working to get the meat prices down. He's looking at the meat producers, which is kind of a lot of foreign-owned cartel there, with just so many of these big companies are oligopolies where small groups of companies own things and their margins are sky high. One thing you can do is cut back the regulation on meat processors so more smaller meat processors can come in and they can get more beef. Right now there's a shortage of cattle, and so but again, you're going to see more and more from the president. He's going to look populist. He's going to be looking like he's fighting for the American people. That pivot he did was within 2 or 3 days of that election up there. They started rolling out the changes, and we're going to see more of that. Val, do we have a caller calling in, or? Okay, guess not. Okay. So what we're looking at is a couple things here. As we talked about, the markets are in a correction now. It's still one of the problems we're really running into is...
You have Chuck on hold.
Okay, let's take a quick call from Chuck. Hello, Chuck.
Hey, Ted.
You had a question for us?
Can you hear me?
Oh, yeah.
Yeah. Ted, I'm so sick of hearing the Republicans talking about them having a better health plan, and they never articulate anything. I mean, Obamacare came in because we needed something for pre-existing conditions. And if they've got something better, let them articulate it.
Yeah, I mean, I think what their plan is, I think they're going to have to go after drug prices. I really think they have to force these drug prices lower. The cost for medical is ridiculous. And I mean, we've been working on this candidly, Obamacare, all this other stuff, and none of it seems to cut the cost. I think there's going to be more to be done in that sector because the population in the United States is aging, and it's going to get more and more expensive. And we're going to we don't have the money. I mean, we're running $2 trillion deficits. We're trying to get them down now. But, yeah, now the Republicans – I think the plan with the Republicans should be to force more competition. Let me give you just a quick example of that. Pfizer tried to buy this new weight loss drug this week. I forgot the name of the company. And I think it was Novo Nordisk started coming in and buying it as well. Well, they're already one of the big the GPL, whatever they're called, producers, weight loss drug producers. Now, so they're trying to get another drug, so they're going to control the competition. What the government should have done, they should have stepped in and said, look, we have real problems with this. We're going to look at it real closely because we want to have 5 or 6 companies with weight loss drugs on the market, so the competition comes in. And so I think they're going to have to get just tougher with these big companies. So the companies they become very emboldened after that judge's antitrust ruling. So it looks like you can do whatever you want and charge whatever you want and use monopoly power. And they have to reestablish that the antitrust is a big deal. But again, this is all about positioning the Republicans as populist friends of working people in the country. Does that answer the question?
Yeah. I mean, just one last comment. It's not a question, but I mean, I'm sympathetic to Schumer. I'm not a Democrat, but I'm sympathetic to their arguments that you're going to have these people whose medical costs are going to skyrocket. It's not 8%, it's 10%. It could be triple. And unless we have an answer to that, I think it's unconscionable to not work with these people.
Yeah, no, I think we have to do something. But one way is the competition. But one way you have to get tough with the competition. You got to stand up to companies and force the competition because they don't want it. Look, it's not just health care. It's healthcare insurance. It's also auto insurance, as the previous caller pointed out, and it's also home insurance. All of these insurances have risen materially faster than inflation by far, and this is the problem. So when it used to be, if you cut gas, people would be happy, but they're getting killed on these insurances and stuff, and they're going to have to do something about it. But I appreciate the call.
Take care.
So yeah, I mean, this is the issue. This is what the Republicans are now struggling. They're going to have to come up. They have a plan, but they have to. And one of the plans is, look, Trump came out and said he's got $21 trillion worth of new plant and factory equipment over maybe 10 years, which is, look, do I believe that number? No. But is it a really big number? Absolutely. And so you're going to see growth next year in factories and plant and equipment coming in. As we've been saying, look, the economy is slowing into year end because of this issue with the immigrants, but you're going to see on the other side of that is this growth as the permitting comes in, the siting comes in, the tax deals come in for the factories. They're going to start building these factories. And if you look at it, this market had a bad week this week, but we're in a number of things that we've kind of shifted over to energy, different type of chemicals, those type of things, steels, all these things. If you look at those, these guys are reporting. You can see some growth coming in from all these plants and equipment and things coming back to the United States, and that's what Trump is counting on. And so now. So next year could be a good year. One of the concerns I have is the Fed is continuing to cut rates. Look, at the beginning of the show, we talked about the ridiculous amounts of money that the AI people are claiming they need. Then we're going to build out, hundreds of billions of dollars worth of factories next year. Where's all that come from, and why is the Fed cutting rates? In that type of environment, you keep rates high, or at least keep them where they are, because there's such a demand for money. And the concern I have is the Fed is flooding the system with money, with low unemployment, basically a good economy, and it's all pouring into asset prices. And it's gonna spill into the economy through inflation. This is why one of the things to watch this week that we watch as the markets were plunging, and we're monitoring our portfolios pretty closely. The stuff, recent purchase we're in, started going up in some of those more industrial areas. The transport stocks were up this week. Gold ended up about even on the week. And that was very telling. If you look at what was it? Bitcoin was down 8%. The NASDAQ was down 3%. It was down 4% at one time. Everything was selling off across the board. Gold held its own, and some of these more economic sensitive stocks strangely held their own, which was very interesting. Which is people, again, next year could be a good year, but it's also saying inflation could become a problem. And the Fed is somewhat in a box in here, and I think we might have to go back to the old days where the economy allocates capital versus just flooding the whole world with dollars, and because the ultimate thing is going to be this massive stock bubble we're already in that's going to kind of continue. And so in order to navigate through that, you're going to have higher levels of cash. because you're going to get big drops in the market, a lot of volatility. You have to be in the right things. You have to diversify in a number of different asset classes, and not just the S&P 500, but sectors inside the right ones inside the S&P 500. Overseas stocks have had a phenomenal year. Overseas stocks did very well. You have to be in precious metals. Up until earlier this year, most advisors didn't even know what gold and silver was. And we've been saying for years now, hey, you've got to be in this sector. This is the sector that's working. People still don't understand the gold and the silver phenomenon. They're looking at the United States and they're looking at the commodities. No, the Asians which are massive savers. They're buying huge amounts of gold, huge amounts of silver. There's been lines in Japan, Vietnam, China, India, in Australia, of people lining up to buy precious metals. And the price goes down some. Gold stopped at $4,000, finished the week in a horrible week in the investment markets around the world. Gold held its own, and that's kind of a warning sign in a way. And so I think, so again, what we're seeing now is going to be a more populist shift. We're seeing clearly a slowing economy. When Chipotle is having problems and most retailers, that's kind of a warning sign. And so, and then what happened this week was, for the first time, there was real pushback on these ridiculous multi-trillion-dollar spend plans by the AI people, that they have no way to get the money, and it finally reached a point where they said the government's going to have to start contributing, and people are like, whoa, that's not going to happen. So you're seeing big shifts out there. So again, the plan you want in this type of environment is increase savings for yourself to protect yourself, more broadly based, diversified accounts that can protect against a falling dollar, rising inflation, and volatility in the markets to take advantage. Because when things move, as we learned in April, where you had in 3 days,
1 minute,
10 to 15%. And so you have to protect yourself. Anyway, we write a lot about this in the free Max Out Savings Report, which we send out once a month. Just go to maxoutsavings.com. It's maxoutsavings.com. And if you need some help, go to our website. You can request an appointment. Just call us up, and we'll set up an appointment with you here in Houston, Texas, and show you how we manage retirement money using our value investing approach to the stock and bond markets. Anyway, I hope we'll see you next week here on the Max Out Savings Show. And remember our motto and philosophy, which should be yours for building up wealth, which is to save aggressively and invest conservatively. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.